a look at the S&P TSX Composite Index, essentially stable versus yesterday's record high closing value. What's it mean for Canadian stocks? Let's bring in a veteran of the Canadian and U.S. markets, Richard Croft, Chairman and Chief Executive of Croft Financial Group. Thank you so much for coming in.
Good to see you, Paul.
Is it counterintuitive, Richard, to see the S&P TSX Composite at its highest level ever when the Canadian economy is facing so much uncertainty?
Well, technically, the U.S. economy is facing a lot of that uncertainty, too, because they've just suffered through the largest tax hike in U.S. history. And I don't know how many Americans realize it's a tax. Perhaps just being a blind-eyed optimist, kind of see the future of Canada. Maybe this was the kick in the butt that we needed. We needed to expand our trade beyond the U.S., and I wrote something about this about 4 months ago. This, in my mind, is strike three. We had tariffs under Nixon, we had them when Trump won, and now we have Trump 2. We've got to make these changes, and if we can do that now, I think Canada is going to come out of this very well.
Do you really believe that stock market investors are pricing in Canada, finding new avenues for its exported goods? Is that why stocks have rallied to record levels here?
No, I think a lot of it has to do with the fact gold's done well, and that's pretty heavy weighting in TSX, number one. Number two, the financials in Canada look pretty attractive relative to other financials around the world, so that's attractive. And energy, I think, is, if there is one area that I think we could see some benefit from for growth in the future, I could see that coming out of the energy sector. So you've got metals, base metals, you've got gold, precious metals, and you've got the banks, and I think that's what's taken us to record highs. But I kind of like Canada. I think we're okay.
What do you tell your clients in terms of their exposure to Canadian versus U.S. stocks?
Well, I've always had exposure to the U.S. one way or the other because it's the largest market in the world, and of course it influences pretty much everywhere else you go. What you're dealing with now is essentially a 12-year-old flying an airplane, and we don't know what is going to come out of that individual at any point in time. So what we're doing here is we're dealing with macro events driven by one person.
Yeah.
And it's almost impossible to predict where things are going. So our model right now is to have basically a good cross-section of both Canada and the U.S. I did move money into U.S. Treasury bills, again, partly because I thought the U.S. dollar would do much better against the Canadian dollar. We're about flat on that, but the Canadian dollar's done much better than I would have thought, given this circumstance. And that, to me, is the big tell that Canada may come out of this fine.
Canadian dollar's done well because the U.S. dollar has cratered.
That's exactly right.
We're seeing the flip side of U.S. dollar weakness.
And who would have thought that? Mm-hmm. That's an interesting point. I mean, when you had the stock market fall in the U.S. after Liberation Day, bond market took a hit at the same time. That is very unusual to see. So.
Okay, you have told clients that you use hedging strategies in this very uncertain environment, including covered call writing.
Yeah.
Tell us why.
Well, I've been doing that since I was in my 20s, so that's a long time ago. Option writing, when you get uncertainty and more volatility, option premiums become more expensive, and you can sell covered calls, particularly if you think you are in what looks like a trading range for the near term anyways. And so that's the way we're generating. Plus the fact you generate tax-advantaged income. You tax it as a capital gain in Canada, which is still at 50%. And, I like that concept, but I've done it for a long, long time. And when you're building portfolios in this environment, I'm kind of looking at portfolios that if I have a more aggressive security, like a Palantir would be an example, writing options on that is interesting because the premiums are very rich because very volatile stock. The greatest example of that is in one of my pools, well, two of my pools actually. I have MicroStrategy, which is a Bitcoin play.
Yeah.
Now, I don't have a lot, but I have it. But basically, I've wrapped an option strategy around it because we did the option strategy on MicroStrategy. Just to give you an example of that, we did that back in January. It just rolled out of that position last week. that was a 75% profit, and I didn't really care where Bitcoin went.
Yeah.
That's the advantage of that, rather than just trying to buy Bitcoin and hope it's going to go up a lot. So.
Is the hedging strategy a reflection of a view that these big market rallies may be misguided? You said
Yes.
In some commentary to clients, one must ask if we're experiencing a classic fake-out boosted by misguided optimism. Are you hedging because you think these markets maybe are getting ahead of themselves?
I think we're in a trading range, Paul, and I think the trading range is probably going to be between 6,000 and 5,000 on the S&P 500. Now, I think what's been removed from the table at this point is that we're likely not going to get the real big collapse that I think a lot of people are fearful of. Still, I think as we move forward and we look at this as a trading range environment, that you're going to get, single-day moves that can be substantial because of my pilot analogy before. In my mind, I think that this is kind of where we are for the time being.
Okay, you mentioned the Canadian banks. Do you like?
I do like the
what they
Canadian
are?
banks. I have for a long time. I think the dividend yields are great. I think they are one of the classic products, if you will, for somebody looking for cash flow and income, particularly in their retirement years. And of course, as I age more, my clients do as well, and they're getting into their retirement. So I think they're very good. And you've got companies, these companies, the banks, can raise their dividends on a consistent basis. I like that.
Richard, thank you for coming in.
Oh, thank you for having me.
Richard Croft, Chairman and Chief Investment Officer of Croft Financial Group. When we